So what we're going to be talking about in today's class, it's the continuation of the candlestick formation. Last week, we discussed about there was a two formation batch of candle on our trading chart. There's a Japanese candlestick. And in this class today, what we're going to be discussing about is there is the three formations, candle formations, three bar formations, and we can also discuss about the four formations bar on our trading chart as well. The candle we're gonna first discuss right here. It's what it called. It's a three candle setup. It's we have the morning star and the evening star. So let's say we have a downtrend, which have been a downward trend like this. And then we have the last bearish candle like this. Okay.
Yes.
And this is the last bearish candle. So I'm going to paint this bearish candle right here. And then what we have next, it's a peanut candle. We have a peanut candle. It can be like this, a peanut candle like this. So it can have a upper wick and then a low wick. It's not necessary it must have, but sometimes it must have. But the most significant aspect right there is the candle must actually have a small body. Notice the body, it must have a small body. So that is what one of the first things you should look out for in a maybe a morning star or an evening star. And then the third candle, which could have formed, will be something like this. It can be at this zone right here, or it's possible it's a little bit up. So whenever you find this on your trading chart, this is what we call the morning star. Right here,
this is the morning star.
Yes, this is a morning star. So whenever you find this on your trading chart, it's called the morning star. It means after a downtrend, a series of downward bearish trend, there is the last standing bearish man right here. And after this bearish man, we have no price. That is peanut. We don't have much bearish interest again. So then what we can figure out next is price. Is it sometimes this candle right here can be colored, can be a bearish candle, can be colored, and sometimes it may not be colored. So the color doesn't matter. Okay, so what really matter right here is this candle right here must be a bearish candle. That means it can be a black candle. It all depends on the color you assign for your bearish candle or your chart. Hope you remember that.
Okay.
So, and then the second aspect right you have to put into consideration is this candle right here must have a small body. Okay.
Yes.
And then the third aspect we have to put into consideration right here is this third candle must be a bullish bar candle. It can also have a low wick like this. It doesn't matter. This can also have an upper wick like this. It doesn't matter. This can say as well have an upper wick and a lower wick like this. It doesn't matter. But this wick right here, it's advisable not to go below this body. Okay. So it can be like this, just like this. So this is a morning star. So it have a bullish implication, on your trading chart. So whenever you see this on your trading chart, it's an indication price is making a plan to move in an upward trend, that is in a bullish trend. So it's a reversal candle formation that price is about to make a change in price, in direction of price. So that is a morning star. So the third, the opposite of this is what do you think the opposite is going to be called? If we have the first, if we have the reversal from the support, remember we have a support right here. Remember all this candle formation, you must look out for it as support and resistance zone. Okay, this is a support right here. Okay, so we have the support right here, and then the opposite of this candle right here, what do you think the opposite is going to be? If we have a morning star right here, what do you think the opposite should be? The opposite should be evening.
Evening star.
Yeah, evening. So you have, gonna get this down a little. Okay, we have this like this. Okay, let's say after, we have a bullish trend, and then what we have next is the last bullish man standing, bullish candle standing right here. And then what we have next is P-knot right here. A P-knot right here. So after that P-knot right here, remember their P-knot can be have a upper wick like this, no a low wick like this, but the body must be small, must be small. Okay, must be smaller than this, at least must be smaller than this. No, it should be able to you should be able to have at least 4 of it in this candle right here. So if we divide this candle to 4, at least this star right there should be at least 1/4 of it. Okay, so in a place whereby you are having this candle as half of this size, is not regarded, it's not one of the features that makes it to be maybe an evening or a morning star. So the next candle we're gonna figure out right here, it's bearish candle formation.
Yeah.
So this is it. So this is it. This is gonna be a bearish candle. Okay, whereby this must be a bullish candle, whereby this must be a bearish candle, whereby this right here may be a bullish small body or a bearish small body. Okay.
Yes.
So this is a morning, an evening star. An evening star. So right there, the indication right there is price up, high tendency to make a rotation downward. Okay, in a downward trend down. So whenever you figure out this on your trading chart, it means momentum is trying to change. That is, you should figure out this, look out for this at resistance on your zone, on your chart. Figure it out, resistance. Okay.
Yes.
So this is the spelling. It's our normal English spelling right here. It's a morning. Okay.
Yeah.
Morning, star. Why this is evening? It's a normal English spelling, not like the Japanese or pronunciation and words. Evening star. Okay. So this candle right here has a bearish implication. Okay, whereby these have a bullish indication. Is that clear?
Yeah.
Bullish upward trend and then a bearish downward trend. So let's move to the next one. So the next one right here, we call it a morning doji star. Morning doji star. So I'm gonna divide my screen into 4 places so that you don't get this confused, so I can make the drawing. Because the first one is a star, while the second one it's a doji, so you don't get them confused up. Good. So the first one we discuss about is the first right here. So right here, 3, okay, 4. Okay, we have the first right here, right here, right here, right here, right here. We have this.
Okay.
This can be colored or not. And then we have this. This evening. Remember that evening star. Why is morning star? Okay. So now let's see how the doji star looks right here. Is it right there? Right here we have this. See that? And
Yes.
then
It's
we have,
a little dodgy. Yeah.
so you can see right here, this is a doji. Why this is a star? This is a
Yes,
doji.
yes, yes.
So that is just the difference right there. They all have the same implication. Likewise, we have right here. So whenever you figure out this on your chart, don't feel confused. So you don't keep on wondering, this doesn't have a body. It doesn't have a body, just a star. Is it? What does it mean? It's the same thing.
Yes.
So this, you call it a morning doji star. Doji.
Okay.
Doji star. Okay.
Yes.
Why this? You call it an evening
Yeah.
doji star. Remember, this body must be bearish. Take note, this body must be bearish. Why by right here, this body right here must be bearish. Okay?
Yeah.
So after a downtrend, we have a bullish trend. Right here, after an uptrend, we have a bearish trend. So
Okay.
these are the 4 variations of the morning and the evening candle formations. Is that clear?
Yes.
Okay. So we can just quickly go on our trading chart to see if we can figure out this on our trading chart. Let's see if we can't figure out that. No, we can just move on to save our time. But let's see if we can figure out something like that on our trading chart. If we can see that, let's go through. Okay, if we can't figure out that, we'd have
Yeah,
to
in the
move on.
middle, you have it. You have it in the middle.
You said?
It was in the previous one. I could see it. No, it was not.
Can figure it out right there?
No. No mind.
No, no. But whenever it forms on your trading chart, it's very, once you have that image diagram, you'll be able to get it or how it looks like on your chart. No, most of these candle formations sometimes when you don't actually search for them, that is when you, okay, let's see this right here. I found one right here.
Okay.
An example of this right here now.
Yeah.
Right here. Can see right here.
Yes.
See it right here. It forms at the support. You can see this our line right here now.
Yeah.
You can see right here. Support, rejection up. You can see how it reverses this trend up now. You can see that. So
Yes.
that is an example. If you remember in last class, we discussed about bullish and engulfing bar. You can see the bullish and engulfing bar right here. You see that?
Yes.
Just want to use this opportunity to show you.
Yeah.
You can see how it makes this trend up. No. And then we also discussed about bearish engulfing bar. You can see a bearish engulfing bar right here.
Let me
See it right here. How it engulfs.
Yes.
So downward. Likewise, right here. See it right here. The reason why this didn't move this trend downward is because it is not at a major resistance zone. That is why the trend didn't pull down. So let's move on our chart. So we can discuss on the next. So the next candle formation we're going to be discussing now is we're going to discuss about the 3 white soldiers. Have you heard that before?
But what again? Sorry.
3 white soldiers. 3 white soldiers. Okay, I'm going to show you. That means after a downward trend, a bearish trend like this, then what we have next, it's a bullish engulfing bar. The next, another bullish engulfing bar. The next, another bullish engulfing bar. So whenever you see this kind of real candle formation repeating itself, consecutive 3 bullish candle formation, they are being called white soldiers, the three white soldiers. Okay?
Okay. Yeah.
So for the first formation right here, the bullish formed without the bears coming in on the second formation. The second formation has a successful bullish movement. The third, same. So from this zone right here, we have a bullish of price upward to this zone right here. So if you view on the higher time frame, like for example, we have this is a 1 hour chart, 2 hour chart, 3 candle. Let's say this 1 hour chart, okay? We have the first candle right here up, the second, the fourth. On the 4 hour time frame, what we're gonna have right here, it's a long, let's say on the 3 hours time frame, if you use the trading view, this is what you're gonna have.
Yeah, I get it. Okay.
See that?
Yes.
This means right here, this is the first candle right here, the second candle right here,
Yeah.
the third candle right here. So you can see this is a very strong, long, bullish movement right here. So whenever you see this in your trading chart, it has high tendency of price to make a bullish price to the upside. So right here, price have high tendency to make another formation of a bullish movement upward. Okay?
Yes.
So this is what we call the three white soldiers. Okay?
Yes.
Three white soldiers. I'm gonna make a drawing again. Three white soldiers. It's a sign of bullish movement up. Whereby the opposite, we have, what do you think we're gonna have for the opposite? It's called three black crows, not soldiers, crows. Crows. So I'm gonna give the writing about this. Three white soldiers. It's the normal English, pronunciations and spelling, English alphabet. Okay?
Okay.
Do you get that?
Yes,
so
yes.
The next right here we're gonna talk about is the opposite, whereby we have a trend moving up. Let's divide this. Okay. So the next we're gonna talk about is let's say we have a trend moving up in a bullish rally, and then what we see next is this candle, a bearish candle forming. Okay.
Yes.
And then next, another bearish candle forming. And then next, another bearish candle formation.
Okay.
So whenever you see this on your trading chart, it's what is being called the what? The three black crows. I'm gonna give you the spelling.
Yeah,
Three
that's fine.
black crows. So right here, it simply means the momentum of price right here is changing for a downward trend. A downward trend. Remember, this zone right here must be a resistance zone. Okay?
Yeah.
Whereby this zone right here must be a support. So you look out for these candle formations at the three white soldiers must occur at the support of a trend. Okay? An example of a support right here is this on our chart. Right here is a support. This is support right here. You can see after price got to this region right here, what happened? Price made a rotation up. You can see right here.
Yes.
Price made a rotation upward. After price make a retracement right here, you can see this zone right here. Price made a rotation upward. Remember what I always say? I say always look out for these candle formations as support and resistance zone. Right here now, what rejected price up right here was a bullish engulfing bar. And right here now, a morning star. Okay?
Yes.
And right here now, it's a bearish pin bar downward. So that is it. So now let's get back on our white chart, on our whiteboard. So we must look out for this candle formation. The white soldiers are the support, while the three black crows at where? At resistance zone. Okay?
Yes, clear.
So that is how to trade it. So the next we're gonna be talking about is the theory inside up. Theory inside up. The first we're gonna have right here. Remember an inside buy which I drew in the last class?
Yeah, this is the inside bar.
Okay, good. This is an inside bar. In the last class, I told you if you have another candle formation addition right here closing above this region right there, I said it's an inside bar. I said, but don't worry, we talk about that in the next class. So right here, after price made a bearish candle, that is price had been in a bearish trend like this. This is the last bearish man standing. Okay?
Yeah.
After the bearish man right here, then what we have next, we have an inside a baby bar. This is the mother bar. Remember that? This is the mother bar. This is the mother. Why? This is the baby.
Yes.
And then what we have next is a candle forming and then closing above this bearish candle right here. Take note of that. It's close above, up. Okay?
Yes.
So that is what we call a theory inside up. What this is showing us is price is making a reversal to the uptrend. Remember what I told you about an inside bar? I said when you want to trade an inside bar according to a trend like this, I say it means two direction. Price can either break to the downside or what? To the upside. So whenever price close above this mother bar, this is now called theory inside up. Do you get that?
How did you call it? Three inside bar.
Yeah, okay. I'm gonna write it right here. Theory inside bar. That is A. Okay. Theory inside bar. Okay. So whenever you see this as the support, it's a sign and indication that price is giving a setup for a potential reversal of trend in a bullish rally up. Okay?
Yeah. Okay.
So what do you think?
Can I ask you something?
Yes, ask me your question.
Okay, so if you are in front of a chart and you have inside bar with the two candles at the beginning, no? So you are waiting for the third to see if the third breaks the support or the resistance to understand the trend.
Yes, I said that in the last class. I said whenever you see an inside bar, you have to patiently wait for where the candle is gonna make the decision. Maybe the candle is gonna close above this, or maybe the candle is gonna close below.
Okay. And can you anticipate a little bit this candle and maybe go down with the time frame and go to see what is going on to the third candle? Or what do you think?
You mean I should relate this on the how it's gonna form on the higher time frame, right?
So if you are working on the 1 hour frame,
okay, let's hang on. Let's say this 1 hour, okay.
And then if you don't want to wait for the third candle after 3 hours, you can go to the 15 minutes frame, for example, and see how the trend is going.
Actually, time frame is a separate topic we're gonna discuss in one of our class. I just want to show you how this candle formation forms. Then in one of our class, I'm gonna tell you the difference between time frame, which is the best time frame to use. You know, if you are trading the 1 hour chart, you must make sure there is something we call signal bar, entry bar, exit bar. We're gonna talk that in one of our class. Entry bar, your signal bar, your exit bar, your trend bars. And there's a lot of things you have to cover. So let's take it one step, another. So, but I'm gonna give answers to the question you asked. So let's say, for example, we have an inside bar right here. You are this 1 hour, and you move to the lower time frame.
Yeah.
The significant right there, the row right here, the purpose right here is we want this candle right here to form an inside bar on 1 hour. Yes. So if we wait for this action right here to form right here, this 3 bars right here, which is an inside bar, is our signal bar. A signal bar is a kind of bar formations that tells you the next direction of the market. Yeah. Right there? A signal bar is a formation on our chart that tells you what that gives you, an image of what the market is willing to do in the future. So whenever you figure out this on your chart, what you are seeing right here is a signal bar, which is giving you the indication that price have high tendency to make an upward trend. But if you move to the 30 minutes to the 15 minutes time chart, what you will be seeing right there will be different from this.
I get it. Okay.
Let's say this is 30 minutes. And then on 30 minutes, let's say, remember, this candle right here is 1 hour. This candle right here is 1 hour. This candle right here, if it formed, then it's 1 hour. Now let's go on 30 minutes. 30 minutes will be 2 of these. So this 30 minutes, we have the first candle right here. We have another candle right here. This 30 minutes. These 2 candle right here is now 1 hour,
Yes.
Yeah, this third candle right here, it's gapped down before it opened up again. Now right here, we have a gap down, then the candle opened again right here. Okay?
Yes.
You can see now that things are now changing to another formation. Now this is it's not clear to you. It's now confusing. You don't know what is happening again on the lower time frame.
Okay.
It's not clear again. So you don't know what is going on again. You don't know this kind of candle formation which is forming. Now this 1 hour right now, it is not yet formed. Now you want to take a trade at this zone right here. You want to take a trade on 30 minutes at this zone right here. Okay? And the 30 minutes now move. It moves right here. And then remember this 1 hour right here is not yet formed. Okay? Take note.
Yes.
It's not yet formed. So it means this 1 hour right here will also be somewhere around this zone. Okay?
Yes.
Around this zone. Maybe before 1 hour now close, this candle now retrace downward back and now go down to form a bearish.
So your message is to stay on the time frame where you are investigating the chart.
Thank you. That is a good response. So right now, what will happen on 30 minutes, price will just take you downward, whereby you want to buy right here, and then you are being what? resulting into a bullish trap. So you lose money right here. The trade cut you off and you sell. You see that?
Yeah. Yes.
So the best strategy to implement is stay on the time you are investigating your signal bar. After the candle is now done with its formation, then you can now move on the lower time frame to see where to get in early. I'm going to show you that. This is, let's say this 1 hour is now formed. Now you can now go to lower time frame, 30 minutes.
Yeah.
The lower time frame will be like something like this, something like this, something like this, something like this, something like this. Okay?
Yes.
Now you can place maybe an order right here, or maybe you want to wait for retracement of price downward before you get in at this zone right here, so that you can buy at a low price. I told you about buying low and selling high in one of our class, pending orders. Have you forgotten? Sell stop, buy limit, sell limit.
Yes, I remember.
So that's why I say all the classes, you have to go through them. That's why I say I agree with the idea you going on a vacation, on holiday, so that you can study all we have done in the class. Because when you resume for the next class, that will be after 2 weeks break. I will give you some during that vacation. After like 3 to 4 days to the end of the vacation, I'm gonna send you a test. I'm gonna send it to you, your email. Yes, so I can know you have really gone through all this class. So right here is where you can now implement, right here and order right here.
Okay.
So what do you think? What is the order you think you're gonna implement right here? I want to know maybe.
I will put a pending order buy.
What kind of order will you put right here? If you want to buy low right here, what kind of order will you put?
I will put a buy. Yes.
I buy what?
A buy, a pending order, a buy. So I will wait that.
What is the name of the order being called? Remember, I told you we have 4 types of orders. 4 types of orders.
Yeah, is a buy limit.
Good. Buy limit is price below the actual buy limit. Will trigger your trade right here. So if you want to buy at the breakout point, maybe you want to see, maybe price can, if price get to this zone before you want to buy. So at the top will be what? Buy stop.
Buy stop.
That is to buy above price level.
Yeah.
I sent this video to you as well. Why buying below price level? Maybe you want price to make rotation downward here before you buy. Then this is a buy limit.
Yeah.
Same goes to when you want to sell, share stop, sell limit. Okay?
Yes.
So let's clean this off. So this theory inside up, a downward trend, then price closing above this extreme bearish candle for an upward movement. Okay, is that clear?
Okay.
So now let's discuss about the opposites. What do you think the opposite is gonna call?
It will be 3 inside bar, but bearish.
3 inside what?
3 inside bar, bearish.
3 inside bar, bearish. Okay, I'm gonna write it down right there. It's gonna be 3 inside down.
3 inside up. I understood bar. Okay, fine.
Actually, you don't need to cram all these names. The most important is
3
just
inside up and down. Okay.
Actually, you don't need to cram all these names. You can call it any name you think you're gonna have very easy for you to remember. But the most important aspect right here is whenever you figure out this on your trading chart, know their implication. That is the most important.
Yes.
Know its implication. Whenever you see this at the support, know this is a sign of indication price gonna break up whenever it closes above this bearish candle. Same goes right here, right here, and then right here. So a bullish trend, this can be bearish, this can be bullish, what can be bearish, and then bearish, closing below this bullish candle. Remember, this is the opening of the candle. Do you remember that?
Yes.
Why this is the close of this candle? Okay, this is the opening. So this candle now is now closing below the opening of this candle. So now what we are seeing right here is market sentiment is changing for the bullish rally now to a downward rally. Remember, you must look out for these actions at the resistance zone. Okay?
Yeah. Yes.
Resistance zone. Is that clear?
Yes.
So that is all you need to know about theory inside up and then theory inside down. So now let's navigate to the 4 candle formations. Actually, there are a lot of candle formations on the Japanese candlestick, but I'm just gonna walk you through one of the most important ones that have higher records of winning probability trade. You know, due to my years of experience in this field, I have experienced different kind of candle formations over the past 7 years plus. I have discovered some candles formation, they are not consistent, while some are consistent. So I have to show you the consistent ones because the purpose of ordering for my course is for me to walk you through so that you don't fall in the pit that beginners in the forex market they do fall into, so that you can skip through this pit, through this hole, so that you can get to where you are going on time, so you can have a fast journey to your destination in this field, so you can become a successful, consistent, profitable trader you want to be in this field. So I'm gonna give you the straight point to the answers so that you can avoid all the noises, all the unuseful information. Straight to the point class. So these are the kind of formation I know which will help you to make profit consistently. And the fourth, the fifth candle variation I'm gonna be showing you right now is the IKK. That one has a Japanese candlestick, IKK. We have the bullish and the bearish as well. So I'm gonna divide this screen into 2. And the first we have right here is also an inside bar. You can see an inside bar have a lot of role to play.
Yeah.
But this right here is a kind of a tricky candle formation. It does trick. No. So now on the bullish IKK, it's just like a trap designed to trap sellers in a downtrend. Okay, so whenever this formed on your trading chart, it usually trapped a lot of sellers who want to sell. Is it right here? Are you right there?
Yes, yes.
So we have a bearish trend, and then here comes a bearish candle. This is a bearish candle. Remember, this is a bearish trend. And then the next candle formation is an inside bar. Do you remember the variations of inside bar I gave to you in the last class? I said there are different kind of inside bar candle variations. And then some will be the same color, while some will be opposite color. Do you remember that?
Yes.
So this will form like this. And then next, you see a candle formation, which is going to form from this zone, you know, this is a bearish candle. Then you see a candle formation, which is going to move down like this. Okay. Some may think, well, right here, the market is trying to make a downward trend.
Yes.
Okay. But what will happen next is price will what? I mean, this is a bullish candle. I mean, price open from the low right here, move up. And then what happens next is price having a close above this candle right here. Can see that? Another way it can form again is like this. Take note of it. And then what we see next, candle come closing above. We have this as a bearish candle, a bearish candle, this a bullish candle. You know, the bearish candle stopped right here, price opened below. Whenever you see price opened below, it means there was a gap. There is a gap. Okay?
Yeah. Okay.
And then what we see next is price closing what? Above this candle right here. So some of traders who think maybe the price, remember the candle right here may have a lower wick, which is a what? Bullish prayer.
Yes.
That is why I'll emphasize on, before you take a trade, let that candle formation finished forming. Let it be done with its formation. Remember those who figure out when price was moving downward right here, who jump in for selling. What do you think happened?
Well,
we have the boost coming in, like I said in the last class. Then what? Above. This is a bullish prayer. Bullish prayer. So those who want to sell right here now, they are being trapped right here. So they're being involved in what is called a bearish trap.
Okay.
A trap set for the bears by the bulls. So you have a close. So take note of this bullish IKK. Okay. Bullish IKK. IK. That is a K. It's a double K. KK. It's a Japanese language. HIKKE. Bullish IKK. Okay. So it means price have high tendency to make a break to the upside, because price have now closed above this bearish candle right here. Okay?
Yes.
After price made a gap low out of this bearish inside bar right here, we have the boost still coming in with a bullish prayer, pull up price, have a close right here, and then pull another price up, have a close. Sometimes these bullish candles can as well have a tail. Take note, a tail at the bottom is what? It's a bullish prayer. So it is part of this bullish candle. So this is a bullish IKK. Okay?
Yes.
Why the next one? What do you think the next one is going to be called?
Well, bearish IKK.
Good. Bearish IKK. We have an upward trend. Then what we have next?
Okay, then you have
Bearish candle. The
bearish.
candle that gap above is where the trap is.
Yes, 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 yes.
So that is why I say, I think I've told you one of our classes, stay on the higher time frame so that you have enough time to do your analysis. You need to trade on the higher time frame so that you can have enough time to study the chart properly, study the confirmation
Okay.
before you take your action. Sometimes this candle can be confusing.
Yeah.
Sometimes they can be confusing. But when you have enough time, like trading on the daily time frame or the 4-hour time frame, it means you have enough 4 hours, enough day to analyze
Yeah.
the chart. Like when you are trading on the 5 minutes, 15 minutes, 30 minutes, no, you don't have enough time. So you want to quickly take a trade, so you rush into trade. And before you know what is happening, you discover you have made a mistake.
Yeah.
So trading on the higher time frame gives you enough time to analyze, to properly analyze what is going on in the market before you take your decision. Okay, so
Yes.
the trick right here is the gapping candle above right here, which is a bearish candle.
Yes. Yes.
Okay, whereby we have
That is also bearish candle.
candle closing below.
Yeah, because uh, after the inside bar, I wait normally the third bar to understand if the trend uh, is up or downwards. And
So
then
that
in this case, the trap is because the third candle is breaking the resistance, and then I think that is going up, right?
you may come again.
The trap consists in the fact that with the third candle, I'm breaking a resistance, and I think that it will go up, but then
Yeah,
it go down.
yes, right, this is it. You think it's gonna go up. Some traders jump in, traders who doesn't have patience. Before you can make money in this field, you must have patience. Patience pays a lot. If you don't have patience, for you to make money is going to be very difficult. So you need patience. And how can you have patience? One of the best ways to have patience is trading on the higher time frame. The more you move to higher time frame, the more patience you have to analyze the market, and the best decision you make at the end of your trading decision. So when you trade, imagine trading on a 1 minute chart, 5 minutes chart, 15 minutes chart, 30 minutes chart. You are bound to a lot of mistakes. Even some mistakes sometimes it's gonna be a silly mistake, which under normal circumstances, you shouldn't have made such blunders. But because you don't have enough time, you don't have patience, you make those mistakes. You make the mistakes. So trading on higher time frame gives you enough time to analyze the market, to figure out what the chart is trying to form. Now you can
Yeah.
see one of the disadvantages of moving to the lower time frame before the higher time frame is done. You can see it. So those who want to buy right here now, what happened? A bearish prayer comes in, close price below, and then what next? Price move in a downward trend. So there's it. Sometimes you can have a tail like this at the top as well on the third candle, which is also a bullish action going on. Then we have enough bearish prayer pulling price downward again. So this is a bearish IKK. Do you get that?
Yes.
This HIK double K.
My sister-in-law is from Japan. I will ask
Yes.
her what the meaning of
Actually, you don't need to know the meaning, but just know that is the name being called. And if you have any other name, you can call it, which you think is gonna be easy for you to understand. It's fine. Actually, we are not interested in the name, but we just to the name it's being called, that is just to know the name is being called. It's not, the name is not so much very important. In fact, you can name it whatever name you like. You can even name it my tricking friend. You can name it the tricking trap, the bearish tricking trap, the bullish or tricking trap. Anything you want, you can name it. Okay?
Yes.
The significance right there is just to know the implication of the candle whenever it forms on your what? On your trading chart. You get that?
Yes, 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 yes.
So that is it. So whenever you figure this on your trading chart, just know, oh, this is a trick. So the price is closing above this. Okay, price is making a rotation to the upside. Okay, here comes a resistance. This is an inside bar. Actually, a price close above this should make a price rotation up. Then price gaps up. Whenever price gaps up, this is how the candle is going to form for the first instance. When this formed, games formed in an upward trend. You see this?
Yes.
Remember, it's an upward trend. So you want to take a buy from this close right here. Then what you figure out next is suddenly price just opened at this zone right here. Price didn't open from this zone. Price just opened from this zone, gapping up. Then should be very careful. It's a signal. It's a strange signal. Something tricky is about to happen. So don't jump right here with the silly traders. We call them foolish traders. We call them goats in the market. They are goats. They are being meant to be slaughtered. So don't be among them. So when price open right here, they jump the trend, think price is going up, they keep smiling. What happens next is price what? Close down. And then what? It turns to a losing trade for them. And they are what? They are being bullish, trapped at the top. So price what? Move downward. So that is everything you need to know about the bullish and the bearish IKK. Here comes the trick. Yeah.
I have understood.
Yeah. Okay, good. So any question?
No, it's fine so far. It was very clear. Then I'm happy like that.